It's time for a first corporate interaction today. Landmark Cars, which is a dealer of premium automotive companies like Volkswagen, Jeep, quite a few of them. Mercedes-Benz is a big one, is a big OEM that they are, retailers too. They reported their Q1 numbers, and it was a weak set of numbers. Revenues have fallen by 13% on a year-on-year basis. The revenue decline was due to the unavailability of multiple high-selling models. Discontinuation of a few models also led to a revenue decline. The margins have been largely stable at 6.4% versus 6.2%. Profits after tax declined by nearly 60%. We're now joined by the top management at Landmark Cars to discuss the way forward. So let me introduce Sanjay Thakker, chairman at Landmark Cars. Sanjay, morning, and thank you very much for joining in. Now, Q1's been weak, and you've articulated the reasons in the press release for that. Can you give us an indication how Q2 is going to be? Is it going to be similar, or are you now seeing the availability of higher selling models? What can you guide for Q2 and the second half of the year?
Yeah, sure. Thanks for having me. Let's start with the good news first. The demand continues to be there for premium and luxury automotive. The market is clearly shifting towards them. And the numbers indicate, the industry numbers indicate that the demand is still there. There was some concern in people's mind that this was a pent-up demand and it would kind of taper off. That is not happening. That's the first thing. The second thing to know about the auto retailer, which we are and which people should understand, is that we work in, we have two segments of business. One is the after-sales business, which is more like an annuity type of a business, the more predictable part of the business. And then there is the sales business, which is dependent on the OE, the new models introduction, the supplies, and we are completely dependent on that. And it is difficult to predict quarter on quarter how the supply situation would be, new model introduction would be. So what happened to Landmark in the first quarter? As far as the after-sales high margin, 40% gross, 18% EBITDA margin business is concerned, which has been growing at 20% CAGR for the last 9 years, that growth continued. In fact, we increased the per car revenue that we generate to 24,000 plus rupees, which is a jump of over maybe 9 to 10% over the same period last quarter. So that business continues to be stable and doing as well as everybody wanted. As far as sales is concerned, clearly we had a challenge in supplies. And what supplies am I talking about? Let me give you one or two examples to kind of detail out this point. Honda India had a 37% decline in their sales because the Jazz, the WRV, the diesel versions were not available for sale from April. How is the situation going to go better? The Elevate, which is the SUV, which is what we are all looking at, is getting launched in the first week of September. And suddenly you will see the Honda numbers doubling from where they are. GLC, Mercedes GLC, which is the global bestseller. It got introduced in India only last week. And the company has seen more than 1,500 bookings all India, which translates into, I don't know, around 1,100-1,200 rupees of sales. And we are their largest partners. So this will percolate down. The first quarter of Mercedes-Benz has seen an 8% growth. My sense is that since the company is guided at a high double-digit growth for the year, the rest of the period is going to be significantly better. So to answer your question, there are the sales aspect, which will start kicking in from August, September onwards. Things will significantly improve. The after-sales business continues to be a backbone and something which we can predict very happily. So this is what is happening. Our MG Motors operations in Madhya Pradesh also started operations in August. So a lot of things which are good are in the pipeline and have already happened.
All right, Sanjay, you've given us quite a bit of inputs out there, but we're running a little short on time, and it's good to hear that demand for premium cars is going up. I'm struggling to buy my new bike, but good to know that you're seeing a lot of traction on ground. Give us three numbers, before we wind this down. After sales service, well, that's the margin accretive business, right? So what do you end this year with? Also, pre-owned, you've had a good start to the year, pre-owned revenues. So what do you end? What do you end? The year with as well on both these two revenue aspects. And since premiumization is doing so well, last year I think the average sales per vehicle was around 17-18 lakhs, if I'm not mistaken. Where do you see that number headed to?
Can you repeat the last part? I missed that.
The last part, the average sales per, I think it was average sales per vehicle. The average selling price, I think it was 17.7, if I'm not mistaken. Where do you see that number headed?
It has gone up to 19.5 lakh rupees for the first quarter. That's something I can do. With the Mercedes-Benz high-end vehicles being available, 25% of what happens, Santosh Iyer went ahead and said that are 1.5 crores plus. So this is something which we are hoping to maintain. We have got the average selling price for sales and service both up. Now the volume has to kick in. Now to answer your pre-owned car question, that is a third pillar of business that we are building. And in your last interaction, we had spoken about the unique business model that we are doing, which nobody else in India has done. And I believe that we will succeed in that. And we are looking at around 100 to 120 crores of revenue from this business, which will be like threefold from what we did last year. And we will grow higher in the years to come.
I had more questions, but out of time, Sanjay, so we'll request you to come back on. But thank you very much. So a great explanation, and hopefully Q2 will be much better, as you said, with all those launches which are lined up. Well, that's Landmark Cars. So